Hello traders, Jeffrey here again with Strategic Day Traders. Great to be with you again. And here is a recap and a roundup of this week's results. We banked a nice 715 pips. And before we start, as always, all the information provided here is for educational purposes only and is not an offer or a recommendation to trade futures, stocks, options, or Forex. So let's go ahead and take a look at the system that I use. First, after I analyze currency strengths, the activity of the day, the news that's coming up, or the news that's happened, I also apply my parabolic price action strategy. These are the indicators that I use. It's a very basic strategy. First, I need to determine the bias of the currency pairs that I want to trade on, and then we'll go ahead and enter either at market or at the pullback signal that you get. If you're in my private Telegram channel group, you'll get a print of a post of the projected signals. It's always ideal to wait for the pullback to get the maximum profit, but if we see momentum running away from us, then there's no reason not to get right in at market. And the reason I follow these trades with this kind of a strategy setup is that the currency pairs, as well as gold and oil, follow a very nice parabolic trajectory, meaning when we reach the outside of this channel, we usually have a small outside bar, or even if it's close to it like this one, and then a nice reversal to the opposite end, especially if we have a supply or demand zone to bounce off of. In this case, this is a little unusual. We bounced off of the supply zone, but this is more typical, bouncing right off of a demand zone and move up. This must have been an old zone over here. And we will also look for overbought or oversold conditions, and we also use the Williams R or the Williams percent to look for momentum. In my weekly coaching calls, we go into more detail and depth on utilizing the strategy, or it's always possible if you want to just place your trades, if your risk tolerance permits it, and enter all the trades in as I post them. That is up to you, but it's better to be able to take a look at the charts and see how the movement of price plays out right on the strategy charts. Now here's what the signals look like. For example, a couple weeks back, we went ahead and released these 4 trades on the 17th. Going into the 18th, my trades for the Eastern time between 6 and 8 p.m. or after the day's analysis and the upcoming news event and sessions that start. The biggest session of Forex that trades around the world is still the London session. So these trades are going into London Open and then the New York Open. But there's no reason if we get a quick move to take our trades and take our profits within just the first couple of hours while the Asian session is running. So this is what I released in this particular case. Here's what I projected on the AUD/JPY. Take a long on a pullback at 95,802 and the stop loss and the potential target. We hit that, and these are the results. The following day, I put those out also, and 95,802, we hit that, and we got a target of 46 pips on our first, and I always like to place a runner, so I'll have 2 targets going for a total of 83 pips on this particular one, and at half a lot, that was a quick almost 300 bucks. This is a little bit more detail of what the entries and the exits look like. So for example, on the Euro New Zealand dollar, which is this chart right over here, on this trade a few days later, we had a long that was called at 177477. This is around 7 to 8 p.m. Eastern time. We hit that target. So you see, we pulled back. This is a short trade that I posted. We hit that entry and wrote it right down, hit our first target, and then kept going all the way down and actually kept moving this target all the way down because this trade played out all through the morning, and after we were up at around 6 a.m. to 7 a.m. back in front of the computer. The straight trade is still active, and you can continue to move your target all the way down. Total on this trade, almost 97 ticks. And let's see. So this past week, this is what the economic calendar looked like. We had some especially volatile news because Chairman Powell spoke and actually sent the markets in a bit of a roller coaster by hedging a tiny bit. And then we had European news with their CPI that came out. Biggest news event of the week was the Friday monthly unemployment rate, which was a landslide for the US dollar. And of course, we paid attention to that for those trades as well. Here is the breakdown of all of the days on the first trading day. This is a signal that was released Sunday Eastern Time after the markets opened. 3 winners and 1 small loss, but just as that small loss of 32 pips, easily offset by the other winners, and 1 no entry right over here. The following day, also 3 for 4, and you can see my losses are maintained at very, very small numbers of pips, okay? If you add everything up, we had a total for the week of, at half of a lot, well over 2,500. Even if you were trading 0.1 lots, okay? You certainly could, if you're learning, trade the smallest micro lot size or mini lot size, got you a nice, easy $500 over. Total of 715 pips altogether for the trades as I took them, and your numbers may be higher or lower depending on where you got in, whether or not you chose to take the pullbacks only, whether you chose to get in at some markets. And again, if you're interested in these trades, go to www.strategicdaytraders.com. You can join my private group, and there's a special right there on the page there to join, and you can get the signals in advance of the trades that I take, and then get an invite and join me for live coaching once a week, as well as lots of resources on the site to help you take these trades. Let's see. Here's another trade that we took. So strategy-wise, in this particular trade, this was a long trade. We got our nice pullback and went right up. And as you can see, when we are in the trade and we are overbought for the pullback, we're looking for it to come in when it's oversold. When it's overbought, we're waiting for it to go to an oversold condition, and then that moves right up. Same thing here. Here's another trade that we took this week. This was the AUD JPY, and this was a long signal. Here's what we called. So at about 7 to 8 p.m. right here, we were looking for a pullback right to 99.049, just as you can see it over here, with a first easy target right up here at 99.673. However, when I watch the candles for the next 1 or 2 hours maximum, I see we're not getting any kind of pullback move whatsoever. In fact, it looks like we had a little bit of a pullback and we started to come back up. Here's my confirmation on the Williams R that shows me heavy long momentum in the top part of the channel, and sure enough, this just took off. So after 2-3 candles, I elected to get in at market and not wait for the pullback, and that played out very easily, okay? I'm watching for just a few simple things to make my determination. And of course, I'll modify, if I'm still in front of the charts, my stop losses or my targets, pretty much using the supplier demand zones and putting my stops behind them, or the channel to put my take profits just behind them if there's no zone nearby there. Here's one more. This is the USD JPY. This was another long from this week, and here's where we called it. We were looking for a long entry at 143.151. That's right over here. And this is another example of where I chose to get in at market instead of wait for the pullback. Why? It looked like the move had already occurred and it's on the way back up. It did not go completely oversold. It looks like the momentum is going up as well. Sure enough, if I wait 1 or 2 or 3 candles, I see it really play out too. A long momentum on the Williams, and we're all the way up in the bought or top end of the stochastic RSI, telling me we're going to stay up there for a little while. I'm in, and this was a quick win in just a couple of hours, and we got right out up at the top of the chart before we saw reversal, and this continued down. So that's what my analysis does. Sometimes it plays out in the next 2 to 4 hours, or because I am looking at a variety of currency strength indicators as well as factoring in sentiment and the news. And sometimes it takes 12 hours, sometimes even as long as the full next day to play out. Let's see what we're looking at this week coming up. We do have some important news out of New Zealand, so we're going to keep an eye on those pairs. They've got their interest cash rate coming out. Fed minutes will come out, and very typically those Fed minutes might give a little extra nuance to what came out in Powell's actual speech or press conference. So the market may turn on that, and of course any unexpected moves are going to affect the US dollar, which directly impacts the Forex pairs we look at. And then on Thursday in the morning, 8:30, which is usually our big news release time, Eastern time, we've got US CPI and some early unemployment claims. We are also going to pay attention on Friday to the UK GDP, Canadian unemployment rate, and then we've got the US core PPI. So at 8:30 a.m., we've got Canada and the US dollar that we're paying attention to. So that's about it for this week's wrap. Another great week. I hope you guys have a chance to take a look at the site and send me an email with any questions that you may have about joining the group, about seeing the signals and learning how to take them directly and bank some of these pips the way I do week after week. Great being with you. That's a wrap, and we'll see you in the next one.